Hey guys, I'm starting up in a minute. Um, I'm going live. Just want to share with everyone, let them know we're going live. See what's going on. All right, guys. So I'll start in 1 minute. Give you a chance to get on, and then we'll start from there. Okay, guys. I'm gonna start up and then go through what we need to go through. All right. So far so good. It's been a fantastic week so far. Okay, all the kind of mess of the market from what was going on before, things have really become a lot better. You can see USD is really pushing up for that long. It's been such a nice experience to see the market do what you're actually saying, and it's been a long time coming anyway. All right. The price action of what we've been looking at when it comes to the pairs that we've been looking at have been pretty interesting, if that's the word to use. Pretty interesting stuff going on over there. So I'm not upset about the market taking long to get to where it needs to be, but nonetheless, it's been a great experience to see what the market's done. So if we review what we have anyway right now, so USD at the moment is how can I put it? USD at the moment has broken past this area here. Now I did give you guys a re-entry. I posted it on socials over here. 1 second. I'm trying to get this for you guys so you can see what I'm talking about. Here. So remember I gave you a few scenarios on Friday. So guys, if you remember on Friday with our normal session that we do every Friday, which will be including this Friday, I gave you 3 scenarios and stop losses included of where to put your entry if the price was to pull back. Now the price didn't do scenario 1 because the price didn't close above here first, neither did scenario 2. So we ignore those. But scenario 3, look at what happened with the market. It pulled right back down here to this demand zone here. Stop loss was beneath here, and look at what the price has done. If you took this entry right here, now we got in down here, all right? And this is the key. We got in down here. Most of our entries, for those of you who got in early with me, are around about this 0.88334 area, all right? So this 0.88334 area that we got into from the bottom of this candle down to here is about 83 or 84 pips. Now, if you just caught this first move here, you would have actually made more pips than us because we had to hold on from the 4th of May until really this week until we saw the joy that we're looking for. But if you came in, the re-entry is actually even more powerful than the actual entry itself over here. So this is just to kind of show you that, look, when it comes to price action doesn't fail disappoint. All right, this is exactly what we've got going on here, and price action is something that you want to be paying attention to. Now, as I've been teaching every single day, today's the last session or part 4. All right, I want to take a look at another trade chart that I gave you guys. So pound Japanese yen. Let's take a look at what's going on here. Now, pound Japanese yen. Now, this is an account that I used to just kind of analyze with, but pound Japanese yen to me is a short. Now, when it comes to premium and discount pricing, let's look at this market to see where we are. All right. What I'm going to do to make this work, I'm going to have to, let's see. let's take some swings and just have a look. Now, I've taught you this already. If you're not sure about anything I'm saying right now, then you would definitely need to watch the other videos. But let's just take a look here. So we have this bullish movement here that the price has formed, right? This is the last leg of bullish activity that we've had. If we zoom into the H4, let's look at what we've got. All right, so this is the wider demand. The price is bullish, right? Now, the 23.6 and the 38.2 levels, if you don't understand why they're here, we don't use these just as a prerequisite to tell you that we do not use these levels. They're here for a different reason. Okay, and if you haven't watched chapter 3 or session 3 of the course, I'm not going to bother to explain now, because otherwise it won't give you any push to go and learn for yourself. So now we see that the price has bounced around a few levels here. Okay, price at equilibrium, the price brought up from this equilibrium point, fair market value point, okay, true market value point. All right. Now, from that point over here, what do we have next? Now, the price is coming to this supply zone here. And something that we're going to go through today is that we've had the price return around this range over here, okay, into this supply order block. Now let's go into supply order block here. Now, if you took this sell, all right, and this is why I always want to make sure that you have a scope of price action. I taught this in number 2 of our 4-part series. Now, over here, look at this supply zone area here, and we can pay attention to discount and premium pricing in a moment. But look at this. So over here on the H1, the price has a supply zone pushing all the way down here, all the way across here. We have multiple supply zones that the price has formed, right? Now, the price is broken above here and returned back to the other side. Now, as the price has returned back to the other side over here, what do we have going on? Now, remember what I told you about supply and demand? So this is a supply order block. The price used this area to sell. This is the last bullish candle before the price changed direction sharply here, right? So that's everything over there is perfectly fine. However, look at what's happened. Now, the price entered into this major supply zone, which in terms of orders of liquidity, this is a stronger supply zone than this one, because if you want to put it this way, this supply zone after the next supply zone down here, all right? So the price has pulled back into this area and now is pushed back long again. So supply has become demand. Now, if you guys took the trade, all right, the price has kind of like gone from where it was, I gave you a shout yesterday, to where it is. Now, introducing another concept over here, look at what the price has done in the interaction between the wick. Now, if we think about the information about what's going on here, this is a manipulation. This is called an induction. So the price has induced additional buying around this region for a specific purpose. Now, if I introduce the Fibonacci and I just take this trend right here, for those of you who were listening to yesterday's teaching, you'll notice where the price bounced to is this level right here, 38.2, which is a sign of potential manipulation, okay, for buyers, all right? So this adds extra confidence that if the sell doesn't happen over here, it should be happening very soon. So if I go over here to pound Japanese yen over here, this induction that we have for the price action, the way that we'll confirm and know for sure that the price is definitely on its way down is going to be this. Now, I'm going to hold on to this trade for as long as I can, because I do believe pound Japanese yen is going to give us a short-term short. Okay. When it gives us this short-term short, if you're not too sure, you're scared to stay in, or you want to just manage your risk, the most obvious entry you can go for will be this. Now, this is everything I'm teaching you here is all of the information that I taught you from lesson 2 within this 4-part series. So if I go over here to the demand zone and I drag this out, all right. So remember, if this area here is a supply zone, then that means this is a supply flip zone. Okay. So supply, I won't even write it out just to save space, but supply has become demand, right? Then we go over here and we look, this is the last demand order block here. So I'm going to put this here, demand order block. Okay. So this is the demand order block right over here. Now, if I put the premium and discount pricing here at the moment, if this was supposed to be a buy at the moment, the price is in premium pricing. So we want the price to be below equilibrium into discount pricing. All right. Now, the order block responsible for this liquidity here, there's 2. This is the main one that's derived price over here. If we trace liquidity all the way here, we'll get up to this point, right? So what we'll be looking for with pound Japanese yen, since it's hanging around the high the way it is, is that we need to see whether the price is going to close, break beneath here and close. If it gets a break beneath here on the return, guys, entry will be here, stop loss will be here, and I would suggest aim for the low of the previous day. Remember, the market is designed to cause maximum pain to traders, and this is a fantastic bull run. And in a bullish run like this, you know, people will be in net profit. And is wicked. Remember, inherently the market is wicked. You have to keep that in your head. As much as it sounds like dark philosophy, it's the truth. Okay, the market will never allow a bullish run to happen like this for too long without there being some sort of selling. And where the price bites to again as a level of retail trader level, which is over here, gives me the confidence to know that they've just enticed a whole bunch of new buyers or people who've re-entered with additional entries. Okay. Additionally, people probably do have buy stops and probably had buy stops above this high. So the price wicking here and triggering it and then hanging around here for a while will get people into the position to believe that the price is probably going to continue going long. Now, if this order block holds true and this induction is true, then the price will be going short unless it's going to push slightly higher. But there will be a short for definite. Now, again, this order block, if the price breaks it and returns, demand will become supply. So you could actually, I'm in at the right at the top of my account, but if you want to, you can get for the break and flip here and then return to the other side. All right. And then your first target will be the low. I mean, the deepest I'll go in terms of looking at this, if we were to go from discount to premium, on the wider scale, we're in a very strong bullish trend, okay? And because of the infrastructure of how Japan works, I've told you about this many times over, Japan's economic structure is heavily reliant on exports. 70% of the GDP is weighted with their exports. So if they're not exporting, they're not really as a country moving forward. Now, an exporting country purposely keeps their currency low, even if they have much riches from their, you know, foreign currency coming in from the goods they buy and sell. It still will put them in a position where they'll keep their currency low, because that will cause trouble for international trade, because it won't become lucrative for people to buy cheap goods and be able to sell them at a higher price. All right, same for China. The Chinese yen is purposely in a range. All right, and there is terminology for keeping price in a range. Okay, and Euro CHF was an example of that, but it didn't work out too well. Okay, in the end. But there is artificial ranges that are created to cap the price between a specific range. Okay. Now, anyway, bearing that in mind with what we've got going on, let's take a look at what we have here. So on the wider scale of things, the last major induction that we had was over here. All right. Last major induction is here. Then the price pushed up here for a long. And then now we've had one kind of touch and two touches at the 62 level. And we've had an induction over here. However, when the price took off, this is not the most premium discount that the price can be in. And as a result, if this short actually works out as it's supposed to, then we should get a very nice pullback back down to the next order block within the discount pricing range. So the two targets that can work out really well for this is that the price really could actually just come straight back to this demand zone here and return here into this order block here, or the price could actually go down to the deeper order blocks, which is one is over here, which is between just a bit further down beneath the OTE level, and then over here, the main order block here of demand. All right. So in terms of positioning yourself for a short, I'm still giving pound Japanese yen a little bit of time, because I do believe the price is going for a short. If we look at the price action on the smaller time frame, and remember, what we're looking at here is the same thing that I've been teaching you. Now, the whole H1 order block here, the actual stop loss range would be above this wick here, just to be safe if you want to. If you put a stop loss at the body, you might get stopped out, possibly. All right. Now, for me, on the H1 or M30, the body of the candles are not closing above this high, which is interesting to me to see. If I go over to the M15, we have a form of a range, but this is a slightly different. I wouldn't want to call it a range because the price still has directionality here. What's actually happened is that the algo of the market is making something called a buy order aggregate. So liquidity has been aggregated pretty heavily over here, especially for the buy. Now think about it. The market just took off for a very strong long just before that. Let's look at the anatomy of the price for a minute here. Okay, so the market took off for a very strong long over here. All right, very strong price action all along here. The price action that we have going forward, we have a strong bullish run on the upside of about 50 pips, right? After this movement, the price starts to kind of range around, as you notice, into a range. Now, for people who trade retail trader patterns, this will be a good way for you to look for a breakout and a buy, right? This is called the flag pattern. Remember, I told you the algorithm of the market is very well versed in every form of algorithmic manipulation. So what you'll find a lot of times is things like this, all right? So with pound Japanese yen, as soon as the price has taken this high right now, there's a lot of people buying. There's a lot of buying pressure going on. So this is what I was teaching about market monopoly. Now, if they do want to take the price short, they need to have as many people in what, as I said, the wrong direction. And this is the perfect place to do it, because right here was this high right here is the high of this massive trend yesterday. This was a very gorgeous trend that the price gave us. Absolutely brilliant. Okay, beautiful trend over here. Almost no resistance to buy in, almost 190 pips. Okay, so if you see this now, the price bounces on two retail levels here, 38.2 and 23.6, and then takes off again with this strong movement. What would you be thinking as a trader? Let's just be honest. I'm thinking I need to get into this buy because it's probably going to do another one of these, right? Now the price has been bouncing around the high for God knows how long, right? And just look at this now. I'm in the sell, guys. Look at this candle that's forming right now, as strong as it is. What do you think is happening right now? Think about it. If you're aggregating buy orders and you're a market maker and you actually want to take the market for a sell, if you get as many people into a buy, what would you do? You're going to crash the market down the other way, right? So this is exactly what's going on with pound Japanese yen. And in a few moments, if the price continues in this manner, then you're about to see a massive drop happen pretty quickly. Now, there isn't any news to trigger this, but news doesn't need to trigger any of these movements. This is algorithmic price action at its finest. So what I'll say to you guys is watch the price at this aggregation point. Now, that being said, the price may hang around today and even take the high of yesterday and do it again. Because the idea over here, the only reason why the price will wait before it pulls back down is because it needs to make sure, or they need to make sure, that there's enough orders in the wrong direction, enough stop losses have been run so that they can make their move down for a short, which will be hard and fast, right? So putting that into perspective here, this is why I would suggest to you that I don't want to close pound Japanese yen just yet. And in this case, which is the widest stop loss I've had in a long time, I don't mind holding on with my stop loss at 172, which is above this wick right here. Okay, you don't have to do that, but in this case, I wouldn't mind doing so. Okay, I wouldn't mind doing so. All right, so this is with pound Japanese yen, what I was discussing, and I wanted to kind of share with you guys so you can have a clue as to what I'm thinking about when it comes to this pair. All right, now moving forward here. All right, look at CAD Japanese yen from what we spoke about yesterday, guys. Look at where the price bounced to. If I just move over to the right-hand side, almost like magic, right? Here's CAD Japanese yen. We had two opportunities here. One was, of course, if the price came back to discount, but look at what the price did. We had a wick here on where the equilibrium level, guys, on the dot. And even if I drag this here to make it more accurate, then you'll see something even more unique. We've had one touch here, but the price didn't do anything. Then we had a second one. But now the second one did do something, and this is the reason why I wanted to teach today about the monopoly of the market and art of entries. Because you can see that the first touch here should have gave the same reaction as the second, but it's only the second one that's taken off. So today we'll go through CAD CHF again later on for us to see why did the price do exactly what it did, okay? So very interesting stuff, guys, as to what's going on. Now for me, to finish off this analysis, I'll go back to the dollar index. You can see one of the plans that we have with the dollar index for this massive strengthening that was always going to happen is that we really needed a strong close outside of this previous day high. And if you remember what I said to you guys, that tomorrow we need a strong close, and most likely the market will do it to confirm the direction. And you can see the direction is confirming itself now. And the strength at which the dollar is moving right now, we probably will have some consecutive movements. Now, tomorrow, when we go for our game plan, we'll see what the market does on Friday and what it gives us to be able to make some decisions. But for the moment, we really are in a good position. Now, of course, when the market gives this much pips, if you're not trying to swing, hold, all the trade positions until the dollar gets to, 122 and stuff like we were talking about, then of course you can kind of leave it off and say, all right, I'm going to come back later on. But, ideally, I would say just keep your eyes focused on the dollar index for now and the strength that is going for. Now, look at the review here. If I was to review this on the weekly, let's take a dollar index analysis. Now, this is the H4 one, so we'll keep that. Let's find the weekly one, which I believe is the monthly one here. Here you go. So guys, you see what's happened now. So you see that this dip into liquidity here from this supply zone, flip zone here that you keep hearing me talk about, massive push with no induction or stop on, price reversing down here and then pushing towards the long now. See the picture of it because it seems almost like magic that the price is closed above here. But what I would say though, is that I really do want to see the price close above this $105 area. Once that does happen, then we're definitely going to be in a very strong uphill push. And at that point, you just want to be holding on non-stop, right? So with that being said, the question will be, are there any re-entries? Well, let's have a quick look and see if there are any re-entries. Now, at the stage that the market is in, it may be pretty difficult to get entries right now, just because the price in the market is becoming increasingly, I would say, dropping increasingly stronger. That puts you in a position where it's like you could end up in a bad position pretty quickly because you're coming in at a very late time. Okay. So my thing is, all right, before I go over to stuff like gold, that if you are looking for a re-entry at the moment, I think the best way to go is to use the supply and demand teaching and just add in this additional concept of looking at supply and demand. Now, supply and demand at the moment is pushing the price down. Institutional money is already in. Everybody else is selling and buying way after them, which is pushing the prices up and down. In this case, down for anything that's paired against the dollar. So, I mean, some simple re-entries that we have had with, for example, NZD-USD that you can take into consideration would be the breaks. Now, the reason why I'm saying the breaks is because the keys to really getting these good entries would be these breaks. For example, here we've had a demand zone, right? Price pushed up strongly yesterday. We had a lot of manipulation on the price to resultingly give us a strong drop the next day. So a very simple entry you can go for. I'm going to use two time frames, the D1 and the H1 to make it simple. So on the H1, what we should be looking for would be if the price ever pulled back into this area of demand and what I would call nested supply, so a supply zone within the body of a demand zone area, so I use blue for that. Anything of that kind of sort, then we should be looking for re-entry to go and continue the trend. Because right now the market is in a trend. Okay, the entry that I gave my academy students, which is up over here, I use the same metrics with a few additional principles that I've taught you. And what we look for is the break of this demand zone. Since we couldn't get up into this area here when the CPI news came out, we wait for the break beneath here and just to return here, and so far so good, right? So this is something that you can adopt for yourselves, guys, for you to get into an entry. Now, if I go to the D1 time frame, what would be the best thing to do? Now, with your newfound skill that I've given to you guys, one of the best ways for you to work this out would be to figure out what, in terms of trend direction, what to do. Now, at the moment, when you go over to the daily, let's start from there. There's a few things you can do. You can actually take price action from the last swing. Now, in this case, we have two major swings. We have a major A to B swing here, and then C point, all right? Or you can have the major swing from here. Now, the problem with this swing is that even though it's still a valid trend because the wick of the candle closed above here, not the body, the price has reversed almost 100%. So you'd be looking anywhere from this range down to this range. Okay, so there's a few things you can do. So if we started off from the bottom range here, what you want to be mapping out is where price points will be at an equilibrium, or in other words, where will price be starting to get into a discount. Now, I'm not expecting any buy-in and the conditions are different, but if you wanted to do this, you could do, okay? If it doesn't work out for you on this time frame, you can take it a little bit higher. And because of everything I've discussed, really, we are bearish for a little while, okay? The price targets I have really are back down to these demand areas here for the reasons I taught you last week. So what the best thing for you to do would be to capture the range you can find and start off with this. So if I start off with this range, I'm going to start off with this candle here. I'm just going to take it down to the most recent range on 2022. In fact, let's just use the whole of 2022 as a range, okay? Now, if we take the whole of 2022 as a range, we get a picture of what's going on in this year. So we can see that price, this was the entry for optimal trade entry right here. You can see the price hit it to the pip. It used as the demand flip zone as the supply liquidity here, right here. And it took off down short, okay? Now that the price has gone beneath equilibrium, price has just left one retail level and is approaching another one, okay? So you should be thinking, okay, what would price be wanting to try to do at these kind of retail levels? That's your first thing. Another thing to work out here is that one of the key ways to look at price right now is that at the moment, because the Australian dollar is selling and is below equilibrium within the range of 2022, then that should let you know that the price right now, all of these prices here are all premium prices. So if there was going to be any selling, additional selling right now, the price maybe would have to pull back quite a bit, which probably won't happen. Okay. And number two, if there was going to be any buying, the price would have to drop a lot lower than where it is. Okay. If you took the other side of the market, okay, which is this swing right here. All right. And you said, okay, I'm going to look at this range. All right. You get another picture here, which is the picture from the lockdown period to understand the mind of what's going on here. And if you look at this from this swing to this, which is basically the most recent swing, you'll see where the price is, where the sales have happened and where the price is held for. Now, if I put this on here as I have, all of a sudden it's going to make a lot more sense why the price was just bouncing around 67. For most people, you know, you guys are really in the inner circle now of understanding price delivery mechanisms. But if you don't know price delivery mechanisms, you would have been wondering why the price is just hanging over here for no reason. Okay. Now, in terms of supply and demand liquidity, we have a supply zone here, right? Should all be okay with that. And then we have a demand zone over here, which is a zone that was responsible for the liquidity that pushed the price into filling out what we spoke about yesterday, which is this unfulfilled deficiency area, where price didn't return to supply that year in 2022. But if I put this here, excuse me, and draw the pink here, then the price has broken beneath a demand zone, returned to the other side, and now it's selling up. So this is another reason why we're in AUD/USD, because even from that structural point of view, we are pretty good, doing pretty good. Now, let's take this a step further and use what I was teaching yesterday in terms of market monopoly. Now, the low of 2022 is sitting right above a very important level, which is the optimal trade entry level. Now, I will go through what these exact level numbers are later on, but we're going to, for now, get ourselves into a position where we can look for what the price is doing. All right. So bearing that information in mind right here, what do we need? Now, if you were to set a target and maybe a midterm target or a couple of weekly targets, now this is 470 pips away, but one of the best entries you could target in terms of the bullish side of this trend, even though I believe the price is going to push further down, because again, the reason why I'll say that very quickly is because remember what I taught yesterday, from the low to the high in this swing here is 2,507.4 pips, okay, or 25,074 micro pips or points, right? But if we look at this just visually, it looks as though that this trend is actually not the largest swing low or swing high trend. It looks like it's this one. If we measure it quickly, we'll see that it actually, in fact, is. Over here, the length of the high to the low is 2,667.3 pips. So in fact, if we were to really look at this Fibonacci in detail, we should be actually looking to use this as a target for the bullish side, but then if there is going to be any optimal buy-in, there may be, but the price is still bearish, right? Because this is the largest parent swing. So in fact, if we flip the direction here, all right, with AUD/USD, what do we have? We have this now. So if we flip it to the other side, do you notice something here? That equilibrium is still at the same point. In fact, equilibrium is a little bit more accurate in terms of which part is actually equilibrium. And you see that this last wick here just about missed equilibrium and has made its way short, right? So if you put those two things together, whether you use this side or you use this side, there's some price ranges that won't change. And you can see what I've done by doing this, which is a more advanced teaching, is that there is an equilibrium range. Now, if I do this equilibrium range, you'll see something special here. This equilibrium range produces the range of where the wicks were bouncing around. So if you've never understood why wicks bounce around as they do, I've just given you the answer. So now that we have this in mind, okay, let's look at this from another angle. If we take it from this range to this range, what do we have? Well, we have one retail level coming up, and then we have another retail level at the same price where OTE is. And just to confirm this, I'll just drag this over here. over here to over here, you can see that the OTE level even kind of overshadows the 23.6 if I take it off, which means that as a first target, the low of last year would be a fantastic area to come out of, because there probably would be a bit of strong, because it still is a discount from the perspective of buyers, right? Even though we know the price is going to go for a short further on. All right. So I would say if you want to take a short with AUDUSD, you should be looking to target at least the 61. I'll just say just beneath the low to be safe, 61,693 region. All right. And what you need right now is just the next flip that you can find, and you'll be good to go, which I've given you here. Right. So let's also try and get another little situation going on here. Let me get another one. Let's take a look at another pair. I'll use the opposite. Let's look at USD CAD, which has been obviously an annoyance for everyone. All right. Now USD CAD is doing well right now. All right. The long that we're looking for, okay, again, let's use our premium and discount pricing to an advantage here. And this is a completely clean chart. So if we go down to the H4 from our review, let's look at the last liquidity, push of liquidity from this swing high to swing low. Now, at the moment, you can see that from the H4 and from the D1, though, that we're bullish, but on the H4, we're bearish. So you can use this in two ways. All right. So I'm going to do the same practice. Okay. We'll use D1 or weekly, and then we'll also use our H4. All right. So I'll use the weekly here. Let's just take a swing. So if I take this swing low here, for example, let's trace liquidity first, as I've taught you yesterday. You have area of demands zones all over here. Let me just areas of demand zone. So I'll just use this one here. If I pull this up here, let's look at where the price is. So are we in premium or discount? This is the first question. Now, right now, the price has just left some of the more optimal entries around OTE 62, so discount pricing. And the US dollar versus the Canadian dollar at the moment, in terms of this last range, we are in premium pricing right now. So we're above equilibrium on the buy side of the market, which means that institutional money wouldn't be looking to take any more buys. So whatever liquidity comes into the market now should be pushing the price for a long, which is the direction we need to go anyway, right? So now that we've got that, let's go over to the D1. I'm going to keep it here and let's see what's happened. So D1, let's see what we've got going on. Okay. Now we can take this from two perspectives. I like to keep the D1 here in this range so we can map out premium and discount pricing. In essence, what we're saying is that anywhere during 2022 to now, anywhere within this region here is where all the liquidity is from institutional buying. So there was a whole load of institutional parties, and I've listed about 9 or 10 to you guys yesterday that will probably be buying within these ranges, all at different prices. Because again, even though institutions work together in groups, they still fight against each other. You know, JP Morgan I don't think is going to be that friendly with Morgan Stanley for everything. Otherwise, you know, who's going to make money, right? So they have their own competitions, and we can make money from their Clash of Titans events that they do in the market. But anyway, if you look at what we have here, we're above equilibrium, and you can see the price is peaking up. So all of the mess that happened yesterday can be explained in deeper detail. The price pushed up long. Now USD CAD even stopped me out, even though I'm in USD CAD on one of my accounts. But USD CAD pushed back down below equilibrium. But if I zoom in here, I want you guys to see how accurate algorithmic price action is. Look where the day closed. The price of this day, the low of this day, and the price of this day closed at equilibrium. And then we see the price over here closed just sub of equilibrium, opened over here, and bam, we have a strong long, and it seems almost for no reason. All right, so now where are the next retail levels available at? Now there's one retail level available here, and there's another retail trader level over here. Once the price gets past here, then it should be going for a long. Now I know the price will obviously go long because we have things like this liquidity gap that was left behind from 2 months ago news that still hasn't been filled. Is an obvious area for the price to go for a long. However, in the near long term, what do we do now? So I'm going to go down to the H4. I'm going to keep all of these Fibonacci levels as they are, or institutional levels as they are, which is the correct term. And I'm going to add another Fibonacci, okay? Now, for the last previous week, we had a very strong bearish run. So at the moment, the weekly range over here is between this area, okay? You can either use this area here, or you can use this area here. Now I'm going to use it from right at the top instead, because the supply zone that's responsible for that liquidity is to the left over here. So this is the supply liquidity for this move. You can see that price got into here a few times, pushed up one more time, pushed short, and then we had another over here, another push back into this area, and then a short, right? So if I put this over here, and let's put this right here. So if we put this right over here, that's the supply zone. Let's zoom in to look at where we can go for targets. Now, if we balance everything together, the price is just breaking out of this equilibrium point, which is the liquidity is so strong. This manipulation point that the market did yesterday is actually at the 62 level, and then it pushed back down to equilibrium. And then in terms of targets, where would the first target be? Now look at this very carefully. I know there's two levels on top of each other, but stay with me. There's a supply zone right here, guys. Now, one of the things I did see is that I didn't buy this movement in this range over here because it happened in the Asian session, which is outside of USD CAD's liquidity time, right? So the price dropped down short, then pulled back over here. So as a first target, where the retail trader level is on the, and I'm going to put this right here, the retail trader level is 23.6, okay, on the higher time frame. And I'm going to get this here for you to see. So on the higher time frame, and maybe we can do two, let's put this here. The higher time frame is that 38.2 is the first retail trader level the price will come to. At the same time, on the bearish side of the market, that would be your optimal trade entry for a seller. So if you wanted to take USD CAD for a target, the perfect target would be within an order block within these two ranges here. Okay, 1.35833, right? And you can use that to your advantage to actually look for a short, or excuse me, to look for your first target. Now, I believe the price is going to break further above this. So what you could do is you could take your profits from here, and then again, as I've taught you, this is a supply zone, right? So if price breaks above and then returns, what's going to happen? Buy in. So you could look for another entry right over here. And that, my friends, is USD CAD analysis done. So these are the two pairs, ADUSD and USD CAD. I just wanted to keep it simple and not give you about 6 re-entries. At least 2 re-entries you can pull. All right, so we go over here. I'm going to put this up here so that you can have the marking. So we have over here, discount pricing for previous short, weekly short. Okay, so let's put this into perspective here. So that's the previous discount pricing for the weekly short up here. All right, and I'm going to go and put that here. And at the same time, it's also premium pricing for retail traders. This is a retail premium pricing entry. Okay. Premium pricing entry for bullish fib. All right. So as a take profit, if we add this institutional mechanism that I've taught you now, then this could be a very good T1. All right. So I'm going to put here good T1, good T1 for buy, and let's put this underneath each other. So I'll put this in blue. So it's a good take profit to get into this area here before the price does any sort of reversal. But also when the price breaks and flips, like I've just put here, is also a good, so and a good re-entry, spot plus, all right? So there's a good re-entry for a buy in this region over here. Plus it's also a good, yeah, T1. So good re-entry for a second buy. All right. So if we're tracing the price like this, I'm expecting this to happen between now. Now there is Canadian dollar news, and this is the last thing to do. Okay, as the tradition is. Let me go over and okay, I've got FX Street open already. So let me just pull up FX Street over here already. So if I go to FX Street already over here, then you'll see what I'm looking at. So on FX Street, excuse the noise. Okay, that's just an alarm. Let me just turn it off. So yeah. So anyway, with that last bit, sorry, I just turned off the alarm, guys. The last bit we're looking at here for the Canadian dollar, let's see if there's any news that will fit that. We have US dollar news tomorrow, which is Jerome Powell speaking. I believe there is an event to do with the US economy, and because he's speaking is possibly high impact, but I doubt anything will happen. And then we have the Canadian dollar retail sales news, which is expected to be more negative than the previous month. And if that's the case, then the Canadian dollar will be bearish. If it's better than the expected, and better than the previous even, or even better than just the expected result, then we'll have a bullish Canadian dollar. Now, how would that look for our trade on USD CAD? Well, if the news comes out weak, then the USD CAD will push along into tomorrow. So we have a bit of a time here, UK time 1:30, to map out what the price is trying to do. Now, personally, for me, if you see the price at that area that we we're just looking at over here, all right, let's see, over here, the price gets here before the price, in essence, takes off, then I would say to you to come out, because the price may do a little quick reversal with the news, and it could be positive. But if the price has not got there yet and is trying to get there, then that would be perfect for us to kind of get ourselves in there, right? So I hope that helps you guys. And that's it for the session. So leave some comments, guys. Let me know if you want me to look at any pairs. Be as interactive as you